a minute or so to have all the participants join in, and then we'll start the webinar. Okay. So once again, good evening, everyone, and thank you for taking out time for joining in for this session today, which we've organized on the Union Budget 2024-25. On our panel today, we have experts from, subject matter experts from different fields. We have our CIO, Mr. Mahesh Patil, who's going to, share his overview during the session. We have our head fixed income, Mr. Kaustubh Gupta, who's going to, of course, share his insights from the fixed income standpoint. We have our fund manager and economist, Mr. Bhupesh Bameta, who's going to, talk in detail about the fiscal math and, the finer lines on the budget. And towards the end of the presentation, we will also, we are going to be joined by a tax expert who is, and since, in yesterday's budget announcement, there has been quite a bit of tax announcements as well. So we thought it will be really useful for our participants, our audience, to get a neutral view. So we would be joined by a tax expert as well. So we have a heavy panel today. And so without much ado, let me, start with handing over to Mahesh. Mahesh, we'll start off with you, and, then the rest will join in.
Yeah, thank you, Medha, and good evening, everyone. Okay, to this budget con call. So this time, the budget, if you look at, if you look at the build-up to the budget, clearly there were a couple of things, okay, which market was looking into. One was how the RBI is going to, how the finance minister is going to utilize the big RBI dividend bounty which was there, right? How that money will be spent, whether it is going to spend in terms of on the investment side or whether to stimulate the consumption. Also, the electoral verdict, okay, after the election results which came in, there was the expectation that whether this budget will be slightly more populist, right? Because clearly in the election, if you look at the expectation was that the bottom of the pyramid, the common man had really not voted for the government policies in a sense. And also since the final the representation, the constitution of the government was it was a coalition government, so there were some pulls and pressures, okay, from the other coalition partners. So what would it be? And then there are key state elections, right, going forward into Maharashtra, okay, where again it's going to be a very key kind of a test for the current government. So whether they would do something really to really please the general public. So in this backdrop, if you look at it, clearly the budget, I think the finance minister chose to continue onto the fiscal consolidation path, and in fact, the fiscal deficit for this year is now projected to be around 0.2% lower compared to the interim budget, 4.9%. So which is, I think, incredible achievement. At the same time, there were certain compromises which were there, right? So the budget was not a populist budget. Also, there was expectation that you will see the rural economy, which has been slightly under pain. And last 2 years, you've seen that rural economy has been sluggish, especially after the COVID recovery. And looking at the election mandate, there was expectation that there will be some impetus to the rural economy. But I think we haven't seen that really any major allocations over there. And probably the feeling of the government would have been that the monsoon is now panning out good. Rural inflation is under control. So there was no need to do that. At the same time, we saw that the focus on capex while continues, but there was nothing meaningfully large increase in the overall expenditure on the capex side. In the last 3-4 budgets, we have seen that the total capital expenditure, right, to the GDP, that has been steadily going up. But I think that is now kind of peaking out. And there has been, I think, in this budget, I think the key thing was, if at all there was any positive in terms of trying to boost the sentiment, was I think to the urban population, where we've seen that the government focus in terms of job creation. Uh, there have been a lot of schemes which have been launched in terms of trying to promote entrepreneurs, okay, to employ more people. Also, there were some tax cuts, okay, we have seen for the middle income for tax-paying population. So we can at best say that it was slightly stimulating for urban consumption at best. Also, the government focus on fiscal meant that the overall borrowing program was well contained, and to that extent, the budget has been disinflationary, and that also gives comfort to the RBI, okay, which is trying to really balance out inflation and growth. So I think that could see you could see bond yields kind of moderating down if inflation comes down, and that's what our view is. So clearly, from the bond market perspective, this seems to be positive, and you will have Kaustubh also talking about how what's your view on the bond market side going forward. So these are the key takeaways. Obviously, in this budget, there were a lot of. In fact, we expected the budget to be kind of. I mean, in the past budget, nothing much on the taxation side, but in this budget, there were a lot of tinkering on taxes. Okay, what we have seen, and we have seen that both on the um, capital gains tax, okay, which was the most talked about, right? Where the from a market perspective, especially from the equity market perspective, the increase in the long-term capital gains tax and the short-term capital gains tax. So clearly, I think the government's um, roadmap, it seems to that they want to really have a uniform tax structure across asset classes. And that's the kind of a roadmap it's looking like. And one could and one could believe that this is probably the first step towards that. So they have increased the long-term capital gains tax on equity from 10% to 12.5%, right? And and probably you could see that going up somewhere down the line. We don't know to what extent they could take it, but that seems to be the roadmap which is there. And similarly, we've seen that broadly they have tried to rationalize, okay, the classification of various asset classes, right, between listed equities and non-listed equities. So that to that extent, the rationalization I think is good in terms of trying to simplifying the whole tax structure. And we'll see that. I think I'm not dwelling onto it because we'll have an expert, okay, who will talk about how the tax implications are for the various asset classes, and how does it look going forward. So that again was a kind of a big defining, I think, moment for this budget. And and we've seen that even for other asset classes, right? So we have seen other asset classes like gold, for example, REITs, which were getting clubbed all under non-equity kind of asset class. Now we've seen that being now bracketed where the long-term capital gains tax, okay, will be in line with what it is for equity. So I think some of these asset class also become now interesting for investors to look at going forward, obviously depending on the outlook for the underlying asset classes. So I would say that from a sector perspective, really from an equity markets perspective, if you look at, uh, there was nothing really big, which I would say, apart from what we saw during the interim budget. Clearly, the focus on infrastructure and investments continues. While at the same time, we've seen that the allocation to the sectors like railways, for example, and roads, which were very large in the last two budgets, that has kind of moderated down to in terms of low single digit. But overall capex of 11 trillion rupees, what was there in interim budget, continues to be there. So I think you will see a steady um, uh, I mean, revival, what we have seen on the investment side and on the capex, I think that should continue, I would guess. Also, the focus on housing in terms of the Pradhan Mantri Awas Yojana, rural and urban housing, I think that outlay has been slightly higher than what it was last year. And so I think the overall housing sector, and especially the other ancillary sectors which are dependent on the like cement, building material, and pipes, I mean that's a sector I think which is on a revival, and we've seen the property market has been doing well. I think that impetus I think continues over there. We other implication which is there is in the on the gold, where we've seen that the
Sorry, Mahesh, if I can just interrupt you for a moment. I am getting messages for a mix of language, Hindi and English, both, a mix of both, please. So if you could just try
श्योर
and,
श्योर
yeah.
या सो हमने देखा है कि यहाँ गोल्ड में एक बड़ी आई मीन देयर वाज अ बिग चेंज इन द टैक्स स्ट्रक्चर फ्रॉम द कस्टम्स ड्यूटी वाज रिड्यूस्ड फ्रॉम 15% to 6%. आई मीन इसका एक कारण ये था कि गोल्ड में काफी स्मगलिंग देयर वाज लॉट ऑफ स्मगलिंग व्हिच वाज देयर, एंड टू रियली चेक दैट द गवर्नमेंट ट्राइड टू ब्रिंग इट डाउन, बट आल्सो टू स्टिमुलेट कंजम्पशन. बट इसका एक नतीजा ये होगा कि companies from a market perspective, the organized players like, for example, Titan and other listed players, they would see get slightly benefited because they were getting disadvantage vis-a-vis the unorganized players जो थे वो काफी हद तक they were sometimes using gold from not from the legal channels, and they were passing on that benefit in terms of discount to the customers. And we've seen that Titan and some of the organized players were getting impacted because of that. So I think this will improve their competitiveness, and many of these organized players they do hedging of gold, whereas the unorganized players will see a big impact on their inventory. So the competitiveness of organized players, I think, will improve because of this custom duty reduction. Also, because gold prices are down by around 8 to 9%, you will see that that could probably stimulate some gold consumption. So you've seen some of the jewelry stocks go up after the budget. And finally, I think it is slightly stimulating, I think, some discretionary consumption, right? Because of a reduction in some of the tax slabs, what we have seen, and and creating some kind of an employment, okay, which is what the various schemes. So I think consumer companies which haven't done as well, right? I think we think they could do well. So this could be a cycle where you would see, with good monsoons coming in, with inflation coming under control, but discretionary spendings could go up, and that's a broad theme, I think, which can move up here. Besides the whole investment theme, which has been doing well. So, to summarize, I would say that from a broader market perspective, I think while the budget, there is not really much of a change in terms of the growth. I think the underlying growth, which has the economy, continues to be fairly strong. We expect the GDP growth this year to be around 6.5% in that range, and capex, private sector capex recovery is likely to continue. Corporate balance sheets are in good shape. Also, the government, the budget focus on trying to support the MSME sector. If you look at the MSME sector, is a very large, almost like 40% contribution to the manufacturing side, and also employs a large part of the workforce. So there have been various schemes which have been there to support the MSME sector in terms of the credit guarantee scheme, and also in terms of the Mudra loans, where the ticket sizes have gone up. So that should kind of revive the whole manufacturing sector, is what we think. And the overall corporate earnings growth continues to be, I think, steady. This quarter, if you look at, right, going forward, I mean, in this quarter, we've seen slight kind of a slowdown in terms of the earnings growth going forward, because there have been few downgrades. I mean, up till now, last 2 years, we have seen the upgrades were more than downgrades, right, for the company earnings. But in this quarter, at least the numbers which have come in for the broader market, what we are seeing is, if you look at the number of downgrades, have been slightly higher than the upgrades. Whereas in case of Nifty large caps, the upgrades have been slightly better. So clearly, there is some amount of pressure in earnings. We expect that the earnings growth will kind of slow down now to around low teens, around 13 to 14% in this fiscal year, compared to around 20% growth what we have seen in the last 2 3 years. But I think overall, I think that would still be a fairly good growth to look at. We think that the overall sectors, if you look at in the economy, the banking sector, the investment sector, the consumption sector, I think all these sectors are likely to now contribute. And I think the overall, after the budget, the earnings growth trajectory doesn't really change much. I think market sentimentally slightly negative because of the capital gains tax which has been introduced. But I think eventually, I think the money flow, I think will continue, because if investors see that equities will still continue to deliver at least in line with earnings growth, I think that's a good outcome which one could expect. Also, at the same time, I think because of the fact that inflation is now coming down, we've seen that the government is also going for fiscal consolidation, and the kind of a money flow which is likely to come into the bond market because of the MSCI inclusion. So we expect the interest rates to also come down, and that also is looking at a very good asset class to look at. And now with the taxation also, right, on some of the hybrid products and REITs and InvITs now becoming attractive, I think hybrid funds could also start to looking attractive, where they can benefit from the kind of a long-term wealth creation from the equity side, as well as the accrual, okay, which will come in from the fixed income side. So I think now post the budget, I think the kind of products, okay, which you can offer to the customers. I think earlier the last couple of years, we have seen a lot of money has moved only into equity funds, right? I think now, I think it will have a lot of interesting products coming in where one can diversify asset allocation going forward. From an equity perspective, if you look at, I would say that the funds to look at from our side, the focus funds, which we've been talking about recently, are the core funds like the uh, ABSL Frontline Equity Fund, which is a large cap fund, and the Flexi Cap Fund. I think these two core funds make immense sense, especially at a time when we've seen that the large caps where the risk reward looks more favorable from a growth and a valuation perspective. Mid and small caps, while good from a long-term perspective, but near term, the valuations there are at a higher end for our comfort. So we are recommending more bias towards funds which are more biased toward large cap. So the uh, frontline equity fund and flexi cap fund, the two core funds over there. From a thematic perspective, Gen Next is a fund I think which we think should do well. Again, consumption, as I mentioned earlier, is a theme which is seeing a revival, especially discretionary consumption, which has kind of underperformed in the last 1 year. It's seeing a revival now, and that this is a good fund to really look at from a long term, which also benefits from the demographic dividend which India has to offer. And so that's one fund clearly one can look at in the thematic side. And Digital India Fund is for more of a contra fund. Okay, we also need to look at sectors, okay, which probably have underperformed, where the valuations are reasonable and which can now turn around. So IT sector, if you look at in the results which have come in, is seeing a sign of bottoming out. A lot of commentary on the IT companies is suggesting that the slowdown has bottomed out. There is green shoots in a few sectors like BFSI globally, and the overall move towards technology and digital is going to increase the IT spend. So this can be a good fund, which to look at from a next 2 to 3 year perspective, more of the defensive, I would say. And obviously the quant fund which we launched recently, which is a very unique offering from our side, which is a fund which actually captures the various trends in the market and can be an all weather fund. And now I think some of the asset allocation funds, right, like the Balanced Advantage Fund, the multi-asset fund, and the hybrid funds, um, these can be an all-round products for us to look into, which you can take, which can take care of the market volatility, and also get a blend of equity and debt or fixed income, where our outlook on both the asset class is positive, and also includes gold actually as a part of this. And one more category, I think, which could emerge now, which had taken a backseat, was the fund of funds. Now, with the taxation on FOFs, right? Okay, in line with the equity funds, I think you would see that category also now coming in, because this would really mean that your shifts from one asset class to another can be done within the fund without actually incurring any taxes. And only when the investor wants to redeem, he'll have to pay tax. So I think that can be an interesting vehicle, fund of funds, to really participate across funds and play the asset allocation strategy. So I think this is the broad overview which I had to share with you. I will hand over the now the presentation to Bhupesh, who will take you to the budget math. and then Kaustubh will take over in terms of the fixed income output. Yeah, Bhupesh, you can take on.
Yeah. Yeah. So, okay. So, hi, everyone. So, in terms of budget, while in market, one can have different views, whether it was good for the markets or bad in terms of taxation. From an economist point of view, it was an excellent budget. The fiscal consolidation came up sharply. So last year we had a fiscal deficit budgeted at 5.8% of GDP. In interim budget, they reduced it to 4.1% of GDP and 5.1% of GDP, and now it is 4.9%. So it's 0.9 percentage point of GDP consolidation in a matter of 1 year. That's very sharp contraction in deficit, which is quite positive for long-term economic growth, for inflation, for overall macroeconomic stability. And on top of that, in terms of expenditure, the way they are doing, the expenditure is now focused more on capex. The same in the interim budget also. And also, a lot of capex is now happening via states, which is arguably more effective because it is closer to the ground. So just to give a sense of the overall budget mathematics in terms of rupee trillion, what you can see is that key point to note here is that just looking at the capex from around 3 trillion in FY19, it is now 11 trillion, around closer to 4 times jump that we are seeing in capex in the last 5 years. In terms of borrowing, that borrowing has come down in the last 2 years in absolute terms. So nominal GDP keeps on increasing. Now let's come to the as a percent of GDP. And here you can see capex steadily going up from 1.5% to 3.4%. Pretty one-way increase in capex, which is quite good for longer term growth sustainability. On the other side, you look into the tax collection, gross tax. Gross tax to GDP has also gone up to 11.8%, which is also closer to all-time record highs. Market fiscal deficit now stands at 4.94%, and REVEX is pretty much stable. So it's both in terms of fiscal consolidation and also in terms of mix of expenditure. It's a very decent budget. Just compared to how it was compared to the interim budget. So from the Feb to now, the big change has happened in this non-tax receipt, which is basically RBI dividend. RBI came out with a record dividend, 2.2 trillion rupees. Why we are getting this dividend is basically because a lot of RBI investments are in US treasuries, and there the rates are very high. So it's like fiscal US government supporting Indian fiscal because they are giving high returns which are coming to India. Otherwise, in terms of other changes, income tax has been quite good. Therefore, it has reduced deficit. On the other side, where they spent the extra money, states are getting a lot more money. You can see here and here also. And, some capex item, which I'll come to later on, which get all this, why this deficit came down even compared to the interim budget. For fixed income markets, the very critical thing is the borrowing numbers. So while overall deficit came down by a strong 22,000 crore rupees since February, the actual borrowing came down by only 12,000 crore rupees. And that was the reason why market was not as happy as they should have been given the fiscal consolidation. Why this change? Because a lot of government reduced borrowing in the T-bill, shorter end T-bill segment, not in the dated borrowing. Probably could be because they might have they could have thought that already we are getting a lot of inflow coming from foreign investors, and therefore the demand supply is already quite favorable for GSEC, and therefore let's reduce borrowing in the shorter end, not in the long end duration. So that's the fiscal maths. This is very good chart. This shows how government has been funding itself. This upper part is the income part, the lower part is the expenditure part. Here we can see that the taxation, the green one is taxation, that has been steadily going up, which is sustainable, which is good for the economy because whenever the tax goes up, it is sustainable, and it doesn't create any problem in the later period. While the capex part is going up, the REVEX part is going down. So the overall fiscal mass is turning towards much more conservatism and much more macro stability for the longer term for the economy. And that is the reason why India is getting a lot of foreign flows, because if you look from not only from the growth parameter, but also from the stability parameter, India looks quite good in the global matrix. A fiscal deficit, as we see, we saw a big jump in COVID. From there, sharp decline to 4.9%. Primary deficit, an even bigger decline. Primary deficit is basically fiscal deficit minus the interest payment. So sharp decline is happening over here. So fiscally, a very good budget, net. Borrowing, you can see here in chart, the absolute borrowing is coming down. As a percent of GDP, so it has to come down. But even in absolute terms, while nominal GDP keeps on growing up, the absolute borrowing is coming down, both for the government and, if we add the PSU borrowing also, overall the borrowing has come down. In terms of where the money comes from and how the government spending the money, again, the same story, RevEx and CapEx. Another thing to note here is that the state allocation, the money which center allocate to state, that has gone up sharply, which is also arguably an economist will say it's a very good number, because typically states spending is closer to the ground, so it is more efficient. So again, here also you can see it's a very good budget numbers. This we have covered. So where is the government spending, most of the spending happening? The spending is mostly happening in the Prime Minister Gram Sadak Yojana and PM Awas Yojana. From the revenue side, these are the schemes which got the maximum allocation. And from the CapEx side, the maximum allocation has come from in highways and also in somewhat in railways, and big one has happened in defense. So these three segments have got the maximum allocation of the Prime Minister in this budget. Narega allocation is broadly stable, even lesser than what it was in the COVID times. PM Kisan is broadly stable. So in most other schemes, the amount of money spent has been quite stable. But in all these asset creating scheme, the Sadak Yojana, Awas Yojana, and interest subsidy, there is where we have got the maximum allocation. So the spending, the quality of expenditure, just to show once again, has been quite decent. Again, overall welfare schemes have come down, while CapEx have gone up. The same story repeating again and again. Now, let's come to the income part, how the government is getting its money. Tax GDP ratio at the close of almost all-time high levels. And remember, this is happening despite the big cut which has happened in the corporate taxation. So while corporate tax was cut massively in FY 19, if I remember correctly, despite this cut in the corporate taxation, overall taxation now is closer to record high. The only time when we had higher taxation was in FY 08. And where is the higher taxation coming from? It is coming mostly from the direct taxes, which again is quite positive, because that is supposed to be progressive. Those who are able to pay gets to pay more. And where in direct taxes, even there also it is very positive. The biggest jump is happening in income tax, which is again quite progressive, because the more able you are to pay the income tax, the more you're getting taxed. So that is the this taxation part. Okay, government gets its money from two sources. One is the tax revenue, one is the non-tax sources. Tax we have covered here. In the non-tax, we have small saving schemes, which where people invest their money in post office schemes. There we had seen a big jump in inflows in FY 21-22. It was the time, if you remember, when RBI was doing a lot of fiscal monetary easing. So bank rates have fallen sharply, but the small saving rates have been quite high at that time. And therefore, these years got a very record level of inflow in small saving. Now, when banks are also increasing their FD rates, the differential between a bank FD and the small saving scheme has come down sharply. And that is the reason why this is in the lower trend. So this one source of funding is slowing. That is to be remembered. On the other side, RBI dividend, record high level, 2.32 trillion rupees. We have discussed that mostly because RBI puts its money into US bonds, which is giving a good return. Okay, now just to give a broader view, how India has been placed compared to globally. One is that our growth has been quite strong, our balance of payment has been quite strong, and most importantly, while the whole world has done a lot of fiscal easing, we have record high fiscal deficits in most of the developed markets. US is now in another league altogether, also in Europe. In India, if you look into how we have progressed since the COVID, our taxation has actually gone up. And where we did this, why did we say that the fiscal deficit is going up? The higher deficit is actually going into these segments, mostly going into food subsidy, fertilizer subsidy, and also in actually equity infusion into PSUs like BSNL and some capex which they have done. Otherwise, if we just if you remove this extra spending which has happened in the food subsidy, fertilizer subsidy, the actual from like to like, to compare what the fiscal deficit, what the government spending was pre-COVID and now, it has actually gone down. So two things to note. Not only since COVID, when the whole world was doing fiscal after fiscal, not only our taxation went up, but also our real spending, which is there to stimulate the economy, has actually gone down. And that is the reason why S&P has upgraded India. And that is the reason why we are getting a lot of flows both in the equity market and the bond market. Because if you look from a global perspective, India looks quite good. Stable growth, strong growth, fastest growing major economy, very stable balance of payment, and very fiscally conservative government. So yeah, that's it basically from my side in terms of overall fiscal. Uh, I think overall it's a good budget from the purely from the macroeconomic angle, and it paves the way for a longer term sustainable growth for the economy, which is a very stable growth without causing any macro stability mishaps that we saw earlier in FY13. So net, I would say a good budget. Now Costa will take it from here and discuss the overall fixed income outlook.
Namaste. Before we get into it, Meda, should we first get a clarity on the text part of it?
Yeah, that would be great actually. So, friends, we have Mr. Viral Shah with us, who represents ENY, Ernst& Young, and he is a subject matter expert on taxation. And we've invited him on our session today to, give his perspective on the various taxation, changes and the capital gains implications. I mean, the changes that got announced yesterday. So we'll have him share his thoughts for, the next couple of minutes, and then, we'll have Kaustubh back to talk about, fixed income products and outlook. So welcome, Viral.
Sure. Hi, Meda. Thank you.
Hi.
Thank you for the introduction. Meda, I'm not able to share my video or share any file. So
Okay.
can you?
Yeah.
I
I'll
think-
just. Yeah, can we
Bhupesh,
just somebody
Bhupesh, you can
help?
stop sharing.
Are you able to hear me?
We can hear you, Viral, but we can't see you, or we cannot see your. If you're trying to share something, we can't see you.
Yeah. So I get a message that I'm not able to start my video because the host has stopped it.
Okay, just give us a couple of moments to sort this out, please.
Who's the host? Priyanka is hosting, or who's hosting this?
Just give me a moment. Sorry, you may just want to go on a
Full screen
presentation,
mode.
full screen mode.
Sure. Is that fine?
No, it's not still gone on the presentation mode.
changes is obviously with respect to the entire revamp of the capital gain tax regime. The idea is that they wanted to simplify various provisions with respect to capital gains, both in terms of the holding period and even in terms of the tax rate. So the law now largely provides that any listed securities, and especially typically the financial securities which are covered under SCRA, the applicable holding period will be 12 months. If it is held for less than 12 months, then it will be short-term capital gain. If it is held for more than 12 months, that will be long-term capital gains. The tax rate on the short-term capital gain on certain securities which were always subject to tax at a concessional rate of 15%, which largely includes equity shares, equity-oriented mutual funds, and the units of the business trust, that has been increased from 15% to 20%. And most importantly, all long-term capital gains, which were earlier largely taxable at the rate of 20%, or under 112A, which is your long-term capital gains, which has been subject to security transaction tax on a recognized stock exchange in India, that has been increased from 10% to 12.5%. So largely all the long-term capital gains is taxable at 12.5. As I said, equity shares, equity-oriented mutual funds, and units of business trust will now be taxable at the rate of 20%. And everything other than that, largely with respect to short-term capital gains, if I'm not an FPI, then it will be taxable at my applicable slab rates. One other important change to note is that certain securities in the last budget itself were basically included within the deeming fiction of short-term capital asset. For instance, if there are certain investments made in the specified mutual funds or market-linked debentures, then irrespective of the period of holding, they will be, any capital gains arising thereon will be characterized as short-term capital gains. Now, in that provision, they've also included unlisted bonds and debentures. So if I'm selling any unlisted bonds and debentures, going forward, even if I'm holding it for 24 months or 36 months, the applicable tax rate will be my slab rates because they are always deemed to be the short-term capital gains. One more important point to be noted is that the indexation benefit which was available for various types of assets, that has been completely done away with. So even if I am holding unlisted shares since 2005, 2001, earlier I used to take the indexation benefit, that has gone. If I'm holding any property, then that also used to enjoy.
Viral, if I can just come in between. If you're changing slides, it's not.
Yeah, exactly what I was going to say. Viral, if you're on a particular slide, we cannot see the change. We can only see the landing slide which says union budget.
Okay, I am actually on a different slide.
Yeah, but that is not. No, it's not moving. I think we'll have to change the view completely. I think it's better we change. We shut off. I think you shut the slide and reshare it. I think that's better.
It had just come for a flash.
No, he just changed the zoom. The view is not coming, Medha.
Is it possible that one of us take control of your PPT and try and...
That's absolutely. But is this visible or this is also a problem?
This is visible.
Benefit is also something which is completely done away with. There was some clarification given by the finance minister later evening yesterday that maybe we may get the indexation benefit up to 2001 for properties which were acquired prior to 2001. But that is something that we'll have to obviously see the fine print. We'll move on to the next slide, which is on the specified mutual funds. So as I was just indicating, in the last budget, there were certain specified mutual funds and market-linked debentures, which they had included within the purview of the deemed short-term capital assets, which means that if I transfer these assets, even if I'm holding it for a long term, the resultant capital gains will always be characterized as short-term capital gains. Earlier, the definition of the specified mutual fund indicated that it will be a fund which invests less than 35% of its total proceeds in equity shares. Now that created a doubt with respect to some of the funds like gold ETF or gold related funds. And therefore, to address that, now they intend to change the definition of specified mutual funds. And they now say that whenever any mutual fund invests more than 65% of its total proceeds in the debt or a money market instrument, in that case, only those funds will be characterized as specified mutual funds, and only any resultant capital gains arising thereon will be considered as a deemed short-term capital gain. Now, important thing to note over here is that while the definition of specified mutual fund is effective from 1st April 2025, the entire deeming fiction with respect to the short-term capital asset is applicable for any transfers which I've undertaken from yesterday. So let me give an example that for a normal security, like let's say unlisted debt, if I'm transferring it today, then they will be deemed as short-term capital gain. But if it's a specified mutual fund, which I have acquired after 1st April 2023, and if I'm selling it as on today, then they will also be subject to short-term capital gains. But if there is any gold ETF, which today may qualify as a specified fund, and if I transfer that today, then they will be subject to the deeming fiction. But if I transfer that after 2025, I may be able to take the benefit of this revised definition post 1st April 2025. The next is taxation of buyback proceeds as dividend for shareholders. So earlier, there was a specific buyback tax which was applicable on the company which were buying back the shares from the investors. Now they have shifted it as a dividend taxation, which means it will be taxable as a dividend in the hands of the shareholders. For resident, they have prescribed a withholding tax rate as well. They have removed the angel tax provisions. So any investment which is made in a closely held company, which is more like a private company in India, earlier there were provisions that if I issue the shares at a price which is higher than the fair market value, then the difference was always getting taxed in the hands of the Indian company. That provisions have been completely removed effective for this particular financial year per se. And therefore, there will not be any taxation for company irrespective of the price at which the shares are issued. The next change is with respect to the security transaction tax. They've increased the STT with respect to sale of an options in securities from 0.0625% to 0.1%, and transactions for sale of futures in security has been increased from 0.0125% to 0.02%. Also, there was always a debate that if as promoters in an entity, if I sell my equity shares under offer for sale, and if these investments were acquired prior to 31st January 2018, and I'm talking about the period when long-term capital gains were always exempt if they were traded on a stock exchange in India. So there was always a debate that if I'm holding unlisted shares prior to 31st January 2018, and if I sell it under offer for sale, which is subject to security transaction tax, so I'm actually eligible for a regime which provides for a lower tax rate, and it also provides me the grandfathering exemption benefit prior to 31st January 2018. Now, because the shares were unlisted, there was always a debate that should I really take the original cost of acquisition, or can I take the index cost of acquisition, or can I really take the fair market valuation done as on 31st January 2018 and take that as a cost of acquisition? Finally, that issue has been clarified now in the yesterday's budget. And what it basically says is that you can take the index cost of acquisition as the cost of acquisition for these kind of shares. Interestingly, this amendment has been carried out retrospectively from financial year 17-18, which is the first year in which the provision really became relevant. There are certain TDS rates which have been rationalized. I think the important thing for us to note is that any payments for repurchase of units by the mutual funds or the Unit Trust of India, earlier there was a TDS rate prescribed at the rate of 20%. Now that 20% TDS rate has been done away with. And last is foreign companies in India were earlier subject to tax at the rate of 40% plus applicable surcharge and cess. But now their tax rate has been reduced from 40% to 35%. I'll just pause over here now to address any questions from a tax perspective.
Yes. Thank
One
you
sec,
so
Medha.
much.
Before we go to the questions, Viral, could you please explain the specified mutual fund wala slide once?
Sure. So, in the last budget, there was an amendment which basically clarified that specified mutual funds are the ones which invest less than 35% of its proceeds in equity shares. Their idea was largely to cover those mutual funds which invest primarily in debt. So their intention was to cover those mutual funds which invest, let's say, up to 65% in debt investments. But the definition was drafted in a manner that wherever any mutual fund invests less than 35% in equity shares, then they will be deemed as specified mutual funds. What it basically indicated is that any specified mutual fund which I acquire as an investor after 1st April 2023, and then when I sell it, even if I hold it for a long term beyond 12 months or 24 months or 36 months, they will be deemed as short-term capital asset, and therefore any resultant capital gain will be taxable in my hand as per my applicable slab rate. I will not enjoy the benefit of long-term capital gain tax rate, which at that point of time was 10%. So if I were to give an example, if I acquire any such mutual fund units prior to 1st April 2023, and if I sell it after, let's say, 2 years, it will qualify as a long-term capital gain. And as per the earlier regime, it was taxable at 10%. As per the current regime, it will be taxable at 12.5%. However, if I acquire any specified mutual funds after 1st April 2023, and if I sell it after 2 years, assuming it's a long term, then even if it is long-term capital asset, they will be deemed as a short-term capital asset. And therefore, to that extent, I will be taxed as per my applicable slab rates. One more change which I wanted to just highlight is that they have now expanded the scope of specified mutual fund. One is that they have included, they have changed the definition of specified mutual fund to say that instead of those funds which are investing less than 35% in equity shares, we are saying that any mutual funds which invest more than 65% of its total proceeds in debt and money market instruments, they will be deemed to be specified mutual funds. But the change in this definition is effective 1st April 2025. So as on today, if any specified mutual funds are transferred, they will still be governed by the old definition until 31st March 2025. Any specific question on this?
No, Viral. I think that's
Thanks.
okay.
No, thanks. That's clear. Thanks.
Okay. There are a couple of questions for you in our Q&A box. Maybe, we'll first take that and then we'll jump on to Kaustubh. So Mr. Udit Agarwal asks, Mr. Viral, please throw some light on taxation holding period for LTCG for debt MFs invested prior to 31st March 23. Precisely, Viral, I think that's one question that is with a lot of people, that before 31st March 23, the ones who've invested in debt MFs were supposed to enjoy the indexation benefits. And after that being changed yesterday, does that change, or what's going to be the treatment for those investments?
Yeah, so first of all, step by step, these mutual fund units, I'm presuming that these are specified mutual funds as they are defined as on today. I've acquired it before 31st March 2023. So therefore, they don't really fall within the scope of the deemed short-term capital asset. And therefore, let's say if I sell it when it becomes long-term, while they will not be deemed as a short-term capital asset, and they will be treated as a long-term capital asset, but they will not get any indexation benefit. So while the applicable tax rate will still be 12.5%, and that is the new rate which was notified yesterday, the indexation benefit will go away because as per yesterday, any indexation benefit is now completely done away with for any securities which we transfer on or after 23rd July 2024. Does that answer?
Yes, it does. So effectively, what we are saying, indexation calculation will not be applicable, but long-term capital gain tax of 12.5% is what is going to apply for such investments, right?
That's correct. So anything which is acquired prior to 31st March 23 are more like grandfather investments. So there the long-term capital gain tax rate benefit could be availed.
Sure. Thanks for that. Okay, another question that we have is finance bill proposed that the buyback proceeds would be taxable as dividend in the hands of the recipient. Whether any intercorporate dividend out of buyback proceeds can be used to declare dividend and claim ATM deduction.
Okay, so we are saying that as a company, I have received a dividend. And if that entity has further declared dividends to its shareholders, then will I be eligible to claim ATM benefit? I'll have to just look at the appropriate language. Maybe I'll send a response to this separately.
Sure. Okay, thank you. Are there different dates of applicability for tax changes for gold ETF, overseas equity mutual fund, and multi-asset equity fund?
So this is
yeah.
also something which we are looking at it, but largely, or rather prima facie, I would say that anything which is listed and if it is a security which is covered under the Securities Contract Regulation Act, ideally the holding period should be 12 months and not 24 months. But I mean, we will just reconfirm this because we are just evaluating that.
So for the benefit of everyone, maybe Viral, you may want to once again touch upon, FOFs, overseas equity fund, and maybe, gold and silver, commodity funds, basically. What would be the tax treatment and if there are date implications that we know of currently?
Yeah, so fund of fund. So all kind of fund of funds which are basically investing in the debt funds, which basically fit within the scope of specified fund. They will also be subject to the deemed short-term capital gain as we just initially discussed. The second question was with respect to gold ETF.
Yeah, so debt FOFs, short-term gains, you said applicable income tax slab rates that will get applicable for debt FOFs.
Again, that will apply from 1st April 25, not as on today.
Okay. The second was for overseas equity mutual fund, international equity funds, international funds largely.
I'll be saying that I'm not really investing in the debt and money market instruments which are governed by SEBI.
I'm investing in international stocks, more than 65% allocation.
To equity or debt?
So international stocks for us is largely...
I think the question is regarding the equity part of it.
Yes, equity.
Yeah, but so long as it is equity, it doesn't qualify as a specified mutual fund. So it's like any other mutual fund. And therefore, to that extent, we'll have to obviously see, because if it's traded on an overseas stock exchange, it may not qualify as listed within a recognized stock exchange in India. And therefore, the normal holding period of 12 months will not apply, but it will be the higher holding period of 24 months.
And just to clarify, and please, Viral, correct me if I'm wrong. Extending the same argument, for example, we have our US fund of fund, which invests in US treasuries, which is a debt fund. But because these US treasuries are not specified mutual fund as per regulator, and these treasuries, they are not listed as well. Our understanding is that even our US FOF fund will be eligible for long-term capital gain tax at 12.5%, provided you hold them for 24 months.
So just to reconfirm, the US FOF is investing into which fund?
US Treasury Fund.
So which is also not basically listed in India.
Yes. Which is not listed on recognized stock exchange.
Stock exchange in India. Yeah. So that also should not really qualify as specified fund.
Yes.
Right. That's correct.
Sure. And the third part that I asked was around commodity funds, which is gold ETF, that you have gold or silver ETF, or there are FOFs based on just these funds, gold fund or silver fund.
I think what we will need to just see is that, one, are they listed? And second is, are they securities under SCRA? If the answer to that is yes, then the benefit of 12 months holding period will be available, otherwise not.
Okay. A second. Another question is around, does the benefit of 54 EC capital gains bond still hold?
Yeah. As an individual, if I basically earn any long-term capital gains and if I reinvest under 54 EC bonds, that still holds. That is not taken away yet.
Yes. Okay. So Mr. Udit Agarwal again asked, so LTCG tax at 12.5%, what will be the holding period? 24 months, 12 months? I believe we've said 12 months for 12.5% equity, right? Non-equity goes up to 24 months, where the LTCG is applicable at 12.5%.
For security, anything which is linked to financial assets, it is 12 months.
Sorry, Viral, your voice was not clear.
Security wise,
So whether the securities are listed or unlisted, if they are listed and if they qualify as a security under Security Contract Regulation Act, then it will be 12 months, otherwise 24 months. So even if, let's say, there are listed bonds or preference shares, so long as they are listed, the holding period will still be 12 months.
Sure. One more question on normal debt MF. Normal debt MF, how will it now be covered under SMF definition? Can you please re-explain? Is a question that I have.
the normal debt.
I don't know if it's me, but I can't hear you,
I
Viral.
also
We are
can't.
losing your voice.
Yes.
Can't hear me?
Your screen is not frozen anymore. You can try now.
You can hear me now?
Hello?
Yes, we can hear you, Viral.
Okay. Yeah. No, I think I was just asking that when we say normal debt funds means I was not very clear on that.
Investing more than 65% in debt instruments, which is...
Yeah, so any fund which is investing more than 65% in debt instruments will qualify as a specified mutual funds. And then the consequent tax will be same as what we just discussed.
Sure. Okay. I think we are done with most of the questions. Okay, one more I'll ask you. Any changes on taxation applicable to NRIs in relation to MFs, TDS rates, etc.?
No, I don't think, not really.
Okay.
There was one change with respect to NRI. I'll just check that, but I don't think it was with respect to TDS. I'll let you know if there is any.
Sure. So thank you, participants, for your questions, and thank you, Viral, for your time. I think we've covered most of the taxation questions, and the remaining, we'll have our in-house subject matter experts, take up after we are done with the session. So thank you so much for, joining the session for us today. Now over to Kaustup for the fixed income outlook.
Yeah. Thanks, Veera. Bhupesh, if you can just upload that last slide on the taxation part of it, in case we have anything further to add up. Yeah, so जैसा कि भूपेश जी ने बताया, इकोनॉमिस्ट के एंगल से ये बजट एकदम ही बॉन्ड बजट टाइप है, क्योंकि द थीम ऑफ द बजट जो है वो है मैक्रो स्टेबिलिटी, एंड लार्जली ये मैक्रो स्टेबिलिटी प्ले आउट हो रहा है फिस्कल प्रूडेंस के थ्रू, विच मीन्स दैट what this government has been promising up till now, that they will remain fiscally prudent, which means that they will continue to make sure that we are consolidating on fiscal, which in essence ensures that our overall inflation and currency stability is kept in mind. More and more government will keep on shrinking, and it ensures that the private players and the rest of the country, they take larger share of the growth part of it. That's the idea. So government spending per se is shrinking, and which is why it is generally leading to you can say in terms of good for both currency as well as interest rates, and as well as from an inflation perspective, overall stability perspective. Now, when the election happened, the biggest concern जो कि investors और street में था कि given that election result were not up to the mark that what markets were pricing in, which means that market were pricing in good clean majority, or instead of that government end up having a coalition kind of government, there was concern that this budget or probably the incremental policy making by the government can become little bit populistic. Against that expectation, whatever steps that the government has taken since the day they have sworn, चाहे वो MSP हो, चाहे वो ministerial positioning हो, चाहे वो budget की policy announcement हो, they have just ensured that what this government was up to in last 5 to 10 years, which is making sure कि long term stability रहे, making sure कि long term growth secure रहे, रादर देन हम शॉर्ट टर्म मेजर्स ले, लॉन्ग टर्म मेजर्स के थ्रू हमारी ग्रोथ की और पोटेंशियल ग्रोथ के और हम फोकस रखें, दैट हैज बीन एक्चुअली प्लेइंग आउट, एंड विच इज वाई जब बजट आया तो उसमें क्लियर था हो गया कि ये बजट नॉन इन्फ्लेशनरी रहने वाला है. जो खास बात जो बजट की, जो आई थिंक भूपेश जी फ्रॉम इकोनॉमिक्स एंगल से बियॉन्ड अगर मार्केट के एंगल से देखेंगे तो ये एकदम क्लियर है कि एट मार्जिन इट इज मेकिंग श्योर कि ये बजट आपको सिर्फ ना इस साल का एश्योरेंस दे रहा है, बट अगले साल का भी एश्योरेंस दे रहा है कि हमारा फिस्कल डेफिसिट फ्रॉम 4.9 अगले साल 4.5 के नीचे चला जाएगा. इसके साथ साथ टैक्स में टिंकरिंग हुई है, बट टैक्स की टिंकरिंग का एक जो बड़ा पार्ट है वो ये है कि डेट फंड का टैक्स में कोई चेंज नहीं हुआ है. जो पिछले साल था वही इस साल है. जो चेंज हुआ है टैक्स में टिंकरिंग का वो ये हुआ है कि जो अदर असेट क्लास है बियॉन्ड डेट, उनके एट मार्जिनल टैक्सेस बढ़ गए हैं. तो जैसे हम बात करें इक्विटीज की बात करें तो 10% और 15% का जो रेट था, तो 10% की जगह 12.5% हो गया है और 15% की जगह 20% हो गया है. तो ये जो गैप है डेट का विद रिस्पेक्ट टू अदर असेट क्लास, वो मार्जिनल कम हुआ है. ये मानना सही है कि स्टिल अदर असेट क्लास को फेवरेबल टैक्स है कंपेयर टू डेट म्यूचुअल फंड्स, बट वो गैप एट मार्जिन कम हो गया है. अब अगर गैप एट मार्जिन कम हो गया है तो जो बड़ा क्वेश्चन है वो ये है कि अब डेट फंड्स की हम बात कर रहे हैं तो हमें एसेट एलोकेशन के एंगल से या रिस्क रिवॉर्ड के एंगल से अगर हमें एनालाइज करना है तो हमें डेट फंड्स को उस एंगल से एनालाइज करना चाहिए रादर देन इस एंगल से कि उनको टैक्स बेनिफिट है कि नहीं है. क्योंकि हम कोई भी इन्वेस्टमेंट डिसीजन लेते हैं उसका जो डिसीजन मेकिंग पॉइंट है उसका टैक्स ट्रीटमेंट नहीं होना चाहिए. ये बात सही है कि पोस्ट टैक्स रिटर्न से हमारे को उसको एनालाइज करना चाहिए, बट एक्सपेक्टेड रिटर्न के अलावा हमें उसको रिस्क रिवॉर्ड के एंगल से भी देखना चाहिए. और इसकी वजह से जब इंक्रीमेंटल आप असेट एलोकेशन कर रहे हैं तो हमें ये सोचना जरूरी है कि इंक्रीमेंटली डेट फंड्स डज इट मेक सेंस और नॉट. क्योंकि कोविड के बाद जब इंटरेस्ट रेट्स बहुत नीचे चले गए थे, जब डेट फंड्स वाज नॉट मेकिंग एज गुड एज इन्वेस्टमेंट एलोकेशन डिसीजन, बट आज चीजें बदल गई हैं. आज इंटरेस्ट रेट्स पीक पे हैं, ग्लोबली इंटरेस्ट रेट्स पीक्स पे हैं, लोकली इंटरेस्ट रेट्स पीक पे है. और गिवन कि ना फिस्कल जब कंसोलिडेट हो रहा है तो अगर कोई भी ग्रोथ स्लो डाउन होता है तो जो इजीएस्ट मेजर है वो मॉनेटरी पॉलिसी होगा, क्योंकि फिस्कल इज ऑलरेडी कंसोलिडेटिंग, फिस्कल अपना रोल ऑलरेडी प्ले आउट कर रहा है. तो जब ग्रोथ अगर एट मार्जिन स्लो डाउन होता है, जो कि हमारा बेस केस है, तो monetary policy has to take that baton and it has to become a more counter cyclical measure in a response to growth slowdown. और इसकी वजह से ब्रॉडली हमें लगता है कि आज ग्लोबली जब इंटरेस्ट रेट स्पीक कर रही है, ग्लोबली कंसर्न्स हो रही है ग्रोथ पे, इवेंचुअली इसका सैल्यूटरी इंपैक्ट इंडिया में भी आने वाला है. तो जब आरबीआई बोल रहा है कि इस साल का ग्रोथ नंबर 7.10 है, उनका एक्सपेक्टेशन है 24-25 का, हमारा इनहाउस नंबर जो है वो 6.5 से 7% के बीच में, जो कि इकोनॉमिक सर्वे का नंबर भी 6.5 से 7 के बीच में है. क्योंकि हमने ये जो सैलिटरी इंपैक्ट है ग्लोबल ग्रोथ का, सैलिटरी इंपैक्ट है फिस्कल कंसोलिडेशन का, सैलिटरी इंपैक्ट है कि हमारा कोई बहुत बड़ा पॉपुलिस्ट मेजर नहीं लिया है, सैलिटरी इंपैक्ट है कि हमारा एबिटा का जो एक्सपेंशन था वो बेस्ट ऑफ एबिटा एक्सपेंशन हमारी कंपनीज का बिहाइंड है, और जो बड़ा इलेक्शन स्पेंडिंग होना था वो भी अब हमारे पीछे है. तो एट मार्जिन हमें लगता है कि ग्रोथ के हेडविंड्स अब ज्यादा है कंपेयर टू पिछले 12 महीने या 15 महीने 18 महीने से. तो इस एंगल से हमें लगता है कि इंटरेस्ट रेट्स ना सिर्फ पीक कर रहे हैं, बहुत जल्दी मे बी इन नेक्स्ट 3 to 6 months आरबीआई विल आल्सो मूव वंस दे विल हैव अ क्लैरिटी कि फूड इन्फ्लेशन जो कि मेन कंसर्न है आरबीआई का, गिवन दैट मॉनसून अच्छा है देश में, वो सेटल हो जाए. फेड स्टार्ट कटिंग रेट, जो कि हमारा बेस केस है कि फेड विल स्टार्ट कटिंग रेट समवेयर इन सितंबर, वंस द ग्रोथ के ऊपर और फर्दर क्लैरिटी आ जाए, जो कि हमारा बेस केस है, एट मार्जिन ईयर ऑन ईयर स्लो होने वाली है. इस बैकड्रॉप में आरबीआई ब्रॉडली तीन तरीके से ईजिंग कर सकता है। एक तो होता है लिक्विडिटी का ईजिंग, एक होता है इंटरेस्ट रेट का ईजिंग, और तीसरा होता है रेगुलेटरी टाइटनिंग जो आरबीआई कर रहा है पिछले 12 महीने में इन टर्म्स ऑफ इंक्रीजिंग capital adequacy ratios, increasing risk weight, by pushing banks ki they should come down. They will make sure that the difference between credit and deposit should come off by pushing various entities that they should be more careful in lending to unsecured loans. So ये जो रेगुलेटरी टाइटनिंग चल रही है, इन तीनों ही एंगल आरबीआई के पास लीवर है, और जो इजीएस्ट लीवर हमें लगता है जो आरबीआई को हैंडल कर सकता है वो है लिक्विडिटी। As far as liquidity is concerned, post September of 2023, this liquidity has generally remained very tight till April of 24. And last 60 days में experience है कि RBI has a margin, it has relaxed on liquidity. Between September 23 to April of 24, MSF was funding rate, and between April of 24 to as of today, now repo is becoming a funding rate for the markets. So already आरबीआई ने रेट कट नहीं किया है, बट थ्रू लिक्विडिटी ऑलरेडी 15 से 20 बेसिस का ईजिंग आरबीआई ने कर दिया है। तो जब लिक्विडिटी ईजिंग होता है तो बिगेस्ट रिस्क दैट द इन्वेस्टर्स आर एक्सपोज टू वो होता है री इन्वेस्टमेंट रिस्क, एंड विच इज व्हाई in order to hedge that risk, it is very important that the investors at margin they increase their duration. तो अगर आप लिक्विड फंड में आ रहे हो तो लिक्विड फंड की जगह इट मेक्स सेंस दैट यू स्टार्ट ग्रेजुएटिंग टू मनी मार्केट, अल्ट्रा शॉर्ट टर्म एंड लो ड्यूरेशन। पर अगर आपका इन्वेस्टमेंट होराइजन 1 साल और उसके ऊपर का है तो शॉर्ट टर्म फंड्स और गिल्ड फंड दे मेक लॉट मोर सेंस। ब्रॉडली अगर आप बजट को देखोगे तो बजट इज क्लियर इंडिकेशन की इंटरेस्ट रेट्स नीचे जा रहे हैं, और हमारा व्यू है कि 10 साल का जो जीसेक है अगले 12 महीने के अंदर it will trade more closer to 6.5 rather than 7 where it is trading today. अगर आप देखोगे कि लिक्विडिटी के एंगल से जो आज डेफिसिट है, मोस्ट लाइकली अगले 12 महीने का एक्सपीरियंस इतना पॉजिटिव होने वाला है, जो लिक्विडिटी के स्प्रेड्स है जो कि 50 से 70 बेसिस पॉइंट बिल्टअप है कर्व्स में, वो यहाँ से 25 से 30 बेसिस पॉइंट का उनमें करेक्शन हो सकता है। सो ब्रॉडली फिक्स्ड इनकम के एंगल से we think that the time is appropriate that you start increasing your duration within the risk appetite that you are having. So if you are having just a cash allocation strategy, then money market, ultra short term, low duration fund make a lot more sense. But if you are playing for duration gains, you are playing for capital gains, then short term funds and gilt funds, they make a lot more sense. So I'll pause here and then probably we can take more questions around it.
Sure. Thank you, Kaustubh. I have 2-3 questions right away for you. We'll start with those.
Yep.
Now that indexation benefit is removed for debt MFs, please throw some light on target maturity fund investments done before 31st March 23. What should investors do? What should those investors do?
देखिए, इंडेक्सेशन बेनिफिट अप्रैल 2023 में ही चला गया था, आज नहीं रिमूव हुआ है। सबसे पहले वो आप क्लैरिटी रखो, ठीक है। अप्रैल 23 से अंडरस्टैंडिंग ये था कि पुराने वाले जो इन्वेस्टमेंट है, यानी 1 अप्रैल 23 से पहले के जो इन्वेस्टमेंट है उनके अंदर आपको इंडेक्सेशन बेनिफिट मिलेगा। इस बजट में आपको ये बोला गया है, और वो इंडेक्सेशन बेनिफिट 20% टैक्स विद इंडेक्सेशन बेनिफिट मिलेगा। इस बजट में आपको ये बोला गया है कि नहीं, इंडेक्सेशन बेनिफिट नहीं मिलेगा, आपको 12.5% का फ्लैट रेट पे आपको कैपिटल गेन देना पड़ेगा। तो इनके जो आपके पास एग्जिस्टिंग इन्वेस्टमेंट है, आप पहले सबसे पहले तो ये मानो कि जितना लंबा वो चलेगा उस पर टैक्स 12.5% ही लगने वाला है, मार्जिनल टैक्स नहीं लगने वाला है। तो कंपेयर टू अदर और इंक्रीमेंटल इन्वेस्टमेंट, पुराने इन्वेस्टमेंट स्टिल will have a favorable tax impact compared to the newer investment. So you should not exit them because they will continue to be a better taste. दूसरा, as a matter of fact, industry body, especially AMFI, is trying to make a representation to FinMin that जो investments 1 अप्रैल 23 से पहले किए गए हैं उनको ये indexation benefit दिया जाए। अब ये कितना सक्सेस होगा नहीं होगा उस पर मेरा कमेंट करना डिफिकल्ट है, बट ये पॉसिबल है कि ये, क्योंकि ये फाइनेंस बिल है, दिस इज नॉट स्टिल एक्ट। ये फाइनेंस एक्ट बनेगा जब ये पार्लियामेंट में पास होगा, और उस एक्ट में पास होने से पहले रिप्रेजेंटेशन इंडस्ट्रियल बॉडी से लिए जाते हैं। तो ये पॉसिबल है, आई विल से इसकी 50% प्रोबेबिलिटी हो सकती है कि आपको जो इंडेक्सेशन बेनिफिट है वो वापस मिल जाए। लेकिन अगर 50% बेनिफिट नहीं भी मिलता है तो भी ये फेवरेबल टैक्स पे होगा, क्योंकि ये इट विल कंटिन्यू टू गेट टैक्स्ड एट 12.5% एंड नॉट the slab rate or applicable tax rate which the incremental investment you will be exposed to.
Sure. Thanks for that detailed reply. And I think for the next question, your previous reply has answered, but I'll still read it out if you want to add on. Any corporate holding MF debt portfolio invested before 31st March 23 is at a disadvantage. One, because indexation benefit is taken away. Two, because LTCGs increase from 10% to 12.5%.
So देखिए, ये बात तो एकदम क्लियर है कि टैक्स तो सभी जने का बढ़ गया है. सो जो भी 10 पे था वो 12.5 पे है. तो उसमें कुछ पहले का इन्वेस्टमेंट आज के इन्वेस्टमेंट से कोई फर्क नहीं पड़ता है. ये बात सही है कि आपको इंडेक्सेशन बेनिफिट मिलता था. वो इंडेक्सेशन बेनिफिट अगर ले लिया है क्योंकि प्रोविजन 48(2) अब नहीं है या वो डिलीट हो गया है, तो वो उस पर्सपेक्टिव से डिसएडवांटेज है. बट अगर आप जैसा कि मैंने पिछले आंसर में बोला, अगर आप इंक्रीमेंटल इन्वेस्टमेंट वर्सेस ओल्ड इन्वेस्टमेंट देखोगे तो ओल्ड इन्वेस्टमेंट स्टिल कंटिन्यू टू हैव अ फेवरेबल टैक्स रेट कंपेयर टू द इंक्रीमेंटल इन्वेस्टमेंट. तो ये तीनों ही पॉइंट ये कहते हैं कि एट मार्जिन तो सभी टैक्स क्योंकि बढ़ गए हैं, तो सारे ही असेट क्लास पे डिसएडवांटेज हो गया है. जो ग्रैंडफादरिंग का जो प्रॉमिस लास्ट टाइम उन्होंने दिया था, उस पे जो गवर्नमेंट ने टैक्स, विदहोल्डिंग टैक्स या फिर इंडेक्सेशन का टैक्स हटा दिया है, उस पे इंडस्ट्री रिप्रेजेंटेशन बन रहा है और वो उनको जाएगा. कितना सक्सेस हो सकता है? आई विल से इट इज अ 50% प्रोबेबिलिटी दैट इट कैन बी क्लब्ड इन, बिकॉज 48 प्रोविजो 2 का पूरा क्लॉज डिलीट हो गया, इसलिए इंडेक्सेशन बेनिफिट गया है.
Okay. Mr. Udit Agarwal asks that I'm an investor in your US Treasury FOF.
Yes.
Investment acquired post 1st of April 23.
Yes.
Will it qualify for LTCG if sold after 1st
Yes.
of April 25 upon completion of 24 months?
If you are completing 24 months, जैसे कि जब वीरल बता रहे थे, क्योंकि जो स्पेसिफाइड म्यूचुअल फंड है उसकी डेफिनेशन में क्या लिखा हुआ है कि इट हैज टू बी 65% डेट एंड मनी मार्केट इंस्ट्रूमेंट एंड और इट हैज टू बी लिस्टेड ऑन रेगुलेटेड एक्सचेंज विच कम्स अंडर सेबी, और यू कैन से कि ओनली डेट एंड मनी मार्केट इंस्ट्रूमेंट्स इन इंडिया, बिकॉज इट इज नॉट लिस्टेड इन इंडिया बट इट इज लिस्टेड दैट फंड ऑफ फंड जहां पे हम पैसा डाल रहे हैं वो ऑफशोर में है. The tax opinion that we have got, and these guys have confirmed to us that if you stay for 24 months, that applicable tax rate will be 12.5 only and not higher.
Okay, thanks for that, Kaustubh. A couple of our participants want to understand the impact of budget on the coming RBI policy. Will rates get slashed, reduced from here?
देखिए, RBI पॉलिसी दो चीजों को इंपॉर्टेंट हमारे हिसाब से देख रहे हैं हम. पहला चीज तो है कि इन्फ्लेशन. आरबीआई का टारगेट है इन्फ्लेशन का 4 ±2, एंड दे हैव दिस फ्लेक्सिबल इन्फ्लेशन टारगेट. एंड एज ऑफ नाउ कोर इन्फ्लेशन जो है वो 3% पे है और काफी टाइम से 3.25% पे है. और जो हेडलाइन इन्फ्लेशन जो कि 5 के आसपास है, वो इसलिए है क्योंकि फूड इन्फ्लेशन का नंबर वो 8% है. फूड इन्फ्लेशन पे आरबीआई पॉलिसी का कुछ इंपैक्ट नहीं होता है. इनफैक्ट अगर आप इकोनॉमिक सर्वे देखोगे तो उन्होंने उसमें आर्ग्यूमेंट किया है कि बॉस, वी नीड टू शिफ्ट दिस टारगेट फ्रॉम हेडलाइन इन्फ्लेशन टू कोर इन्फ्लेशन, बिकॉज वहां पर आरबीआई का इन्फ्लुएंस ही नहीं है. लेकिन क्योंकि फिलहाल आरबीआई का टारगेट हेडलाइन इन्फ्लेशन है, तो आरबीआई ने थोड़ा सा हॉकिश स्टैंड ले रखा है. बट हमारी अंडरस्टैंडिंग है कि उनका ये हॉकिश स्टैंड इसलिए है क्योंकि ग्रोथ बहुत अच्छी है. पिछले साल जीडीपी का ग्रोथ 8.25% था, और अगर जीबी का ग्रोथ देखें तो वो 7.25% था. ना आरबीआई कह रहा है, और ये आरबीआई का व्यू है जो कि उन्होंने लेटेस्ट एक पेपर निकाला था नेचुरल रेट पे, न्यूट्रल रेट पे. तो उन्होंने ये बोला कि इंडिया का पोटेंशियल जीडीपी 7% है, और क्योंकि पोटेंशियल जीडीपी से ज्यादा अगर आप ग्रो कर रहे हो तो कोई काउंटर साइक्लिकल मेजर लेने की उनको जरूरत नहीं है. हमारा ये व्यू है, बिकॉज आज का कॉल बजट पे था, हमने मैक्रो पे डिस्कस नहीं किया, बट हमारा ये व्यू है कि अगले साल का जीडीपी 6.5 से 7% पे रहेगा. तो जब जीडीपी स्लो डाउन होगा तो काउंटर साइक्लिकल मेजर्स लिए जाएंगे. और गिवन की बजट काउंटर साइक्लिकल मेजर नहीं ले रहा है, तो ओनर्स ऑफ काउंटर साइक्लिकल मेजर मॉनेटरी पॉलिसी पे आता है ना. मॉनेटरी पॉलिसी के पास, जैसा कि मैंने कहा, लिक्विडिटी और रेट दो बड़े मेजर्स हैं. लिक्विडिटी पे दे हैव ऑलरेडी मूव्ड. हमारा ये व्यू है कि इस पॉलिसी में तो नहीं, बट अगले 6 महीने से 9 महीने के बीच में आरबीआई रेट कट चालू करेगा. ब्रॉडली हमारा बेस केस है 50 बेसिस मिनिमम एंड पोटेंशियली 100 बेसिस का रेट कट अगले 12 से 15 महीने में रहेंगे.
Sure. How would GSEC fund be for this market situation?
It's very good, because देखिए, एक तो डिमांड सप्लाई का गैप है, जैसा कि भूपेश ने बताया कि ओवरऑल फिस्कल कंसोलिडेट हो रहा है और डिमांड सप्लाई सेम है, टोटल सप्लाई सेम है, लेकिन नॉमिनल जीडीपी के पर्सपेक्टिव से देखेंगे तो सप्लाई कम हो रही है। नॉमिनल जीडीपी मतलब सेवर्स की बैलेंस शीट से देखोगे तो सप्लाई कम हो रहा है। दूसरा, इस साल जेपी मॉर्गन का बॉन्ड इंडेक्स का इंक्लूजन है, उसकी वजह से डिमांड सप्लाई हेवीली स्क्यूड है, लेकिन हमें लगता है ये एक साल का नहीं है। इवन अगले साल मोस्ट लाइकली हमारा ब्लूमबर्ग में एडिशन होगा, तो अगले साल भी सिमिलर डिमांड सप्लाई स्क्यूनेस होगी। उसके अगले साल, बिकॉज रिसेंटली एसएनपी ने इंडिया का आउटलुक अपग्रेड किया था, पॉजिटिव किया था। यूजली 15 से 18 महीने जब ये आउटलुक अपग्रेड होता है तो इंडिया अपग्रेड होता है। अगर इंडिया अपग्रेड हो जाता है तो ये डिमांड सप्लाई सेकुलर अगले 4-5 साल के लिए स्क्यूड है कि डिमांड सप्लाई को आउटस्ट्रिप करेगी। तो इन सब सिनारियों में कि आपका इन्फ्लेशन कम है, रेट्स पीक हो रहे हैं, आपका डिमांड सप्लाई स्क्यूड है, इट मेक सेंस कि आपका सोवरेन में एक्सपोजर हो, ड्यूरेशन में एक्सपोजर हो, और उसमें 10 साल का जीसेक सबसे अच्छा लगता है हमें। ब्रॉडली हमारा कॉल है कि अगले 12 महीने से 18 महीने के बीच में 10 साल का जीसेक 6.5 के आसपास होगा।
Sure. Kaustubh, anything that you want to share on the treatment of dividend reinvestment? Somebody has asked on that as well.
Dividend reinvestment? No, I'm not aware
Yes.
of it.
Yeah. Okay. Mahesh, from your standpoint, maybe if you want to throw some light on the impact.
Can I just come in a minute if you don't mind?
Yes, please. Sorry, Mahesh, I was asking you that from your from the equity standpoint, if you want to throw some light on any impact on arbitrage fund category. So we have been receiving, queries on that with respect to the changes in tax per se on the STT part of it. Do you see some impact happening there?
Yeah, so in the arbitrage fund, again, there are 2, 3 factors, okay, which drive the returns over there. One is the broader carry which is there, right, in the market. So looking at the market current situation, okay, we think that still the market is still, there was a concern that post budget, okay, you could see a major correction in the markets. But looking at the demand supply, I think we think the carry should be fairly okay. So we don't see that really impacting returns. Okay, on the STT, okay, there will be a small impact, okay, which will be there. We have to yet to calculate, okay, what that would be. I don't see any major. Obviously, the tax rate as a long-term capital gains tax or a short-term capital gains tax has gone up. So relative attractiveness, okay, of arbitrage vis-a-vis the liquid funds, okay, which it was competing with, okay, that could probably come down a bit. So accordingly, one has to look at it. But I still believe that it would still be better off, okay, than if you want to park your short-term money than say in a liquid fund.
Sure. So you basically do not see the flows in the arbitrage category really getting impacted also, or from the return standpoint as well.
Should not. No, I think though the differential has come down a bit, right, than what it was earlier, than what the liquid funds on a post-tax basis.
Okay. Thank you for responding to that. And I think we've covered all the questions that have been, shared by our participants. Any one of Kamaini or anybody else has any questions or want to make a closing remark? Else, we can then conclude the call.
Thanks, Medha, for that. I think there just was somebody who's asking that if there is any new law or regulation coming towards trying to prevent bank MF money moving or bank FD money moving into mutual funds. I don't think we are the right people to be able to answer that question or to be able to give any views on that. So we would not be in a position to answer that. Of course, of any view on US Treasury interest rates, because people are very keen on finding out what appears to be that some view on that.
देखिए कमानी जी, हमने ये यूएस ट्रेजरी फंड जब लॉन्च किया था, हम अराउंड 5% का यील्ड था, और ब्रॉडली हमारा ये व्यू था कि रेट्स पीक पे हैं। इनफैक्ट उसके बाद नीचे रेट्स 380 पे गई, फिर वापस 4 आप पे आ गई, एंड एज वी स्पीक दे आर ट्रेडिंग क्लोजर टू 4 क्वार्टर। ब्रॉडली यूएस के अंदर जो एक्सपेक्टेशन था ग्रोथ स्लो डाउन का, वो डिले हुआ था लास्ट ईयर, राइट। एंड एज वी स्पीक मोस्ट ऑफ द डेटा जो यूएस में आ रहा है, हाई फ्रीक्वेंसी डेटा, चाहे वो इन्फ्लेशन को लेकर हो, चाहे वो एम्प्लॉयमेंट को लेकर हो, चाहे वो आपकी लोकल ग्रोथ को लेकर हो, वो पॉलिसी मेकर्स को नीचे की तरफ सरप्राइज कर रहा है। इसलिए अगर आप देखोगे पिछले 1 मंथ में मोस्ट ऑफ द कमेंट्रीज जो कि चाहे वो स्पीकर से हो, फेड स्पीकर से या साउंड बाइट से, वो आ रही हैं कि Fed is probably ready to cut rates somewhere in September. In fact, markets were earlier pricing that there will be only 2 cuts, but now market start pricing that probably this saal there will be 3 cuts. So broadly, hamara view, it is in line with our view. We were of the view, even in December when we came out with our stuff, when market was pricing 7 cuts, we were saying no, 4 to 5 se zyada hona difficult hai is saal. And then last, every month when we come out with our monthly note, we have given this view that we think 3 cuts is saal and probably 4 cuts next year Fed US mein honge. Now, as the incremental data on the slowdown keeps confirming this view, I think USTs will start trading lower. Our base case is that UST will move closer to 3.5 to 375 by, you can say, from probably 12 months from where we are today. So that's the kind of potential gains that you can make in this US fund of fund. The only, and now given that the taxation advantage is in favor, because as per our understanding, if you are investing for 24 months, the applicable tax rate will be 12.5 in these funds. Compared to when we launched this fund, the tax was the applicable slab rate. So it's a flat rate. So tax advantage hai, and view hai. As of now, I'll say only disappointment is we can't take more funds in this category because we are full on our limit. Again, we have made representation to regulatory bodies that this limit should be opened up. Hopefully, once the budget is now clear and it is out of our way, I think sooner we should also hear on that front that these limits are opening up. And if each stays somewhere where they are today, I think it makes sense to invest in these category of funds.
Thanks so much, Kaustubh. I think, 1 second, Meda, there are some more questions which are coming in. No, thanks. Home, you're most welcome. Thanks, Kaustubh. Thank you so much. Thanks, Mahesh sir. Thank you, Bhupesh. And thanks, Medha, for being such a gracious host. Thank you all for your time. I'm sure this has been a great, insightful session for all our participants. Thanks again for your time. And thank you all attendees for making the time to be here.
Thank you.
Thank you, everyone.
Thank you.
Thanks.
Thank you.
Thank you all. Bye.